Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, March 27th, 2022. I am starting this evening on the daily chart. And one thing that I did do on Friday afternoon was that I went back and I updated the count. And it does not change the longer term view that the markets have reached their highs up to at least a cycle degree, if not one higher, which would be a super cycle degree, which does suggest that we are in the very beginning stages of a longer term corrective phase, which will consist of an A wave down, a B wave up, and a C wave down. The difference is that it is on a very long-term basis. So I'm going to be putting together an additional update, which will really just put together that part of it, that long-term picture. And I do mean long-term, and show how I've come up with it and where normally the markets would go in a correction of this nature, but then how we have to add in the time factor. Because of how corrections line up to fourth waves and second waves. So your Fibonacci is going to line up and on a much grander scale, much larger scale. So, but for today, I am starting the update here on the daily chart so that I can show the significance of the change for us on a day-to-day basis. So I continue to conclude that the high at 16,767.50 is the high of an intermediate 5, a primary 5, a cycle degree 5, and more than likely a super cycle degree 3rd. So that puts us in a very longer term corrective phase under a labeling of a super cycle wave 4 correction. Again, that I'm saving for an additional update. This is to say that we are in a cycle degree correction. So in other words, we're going to be putting in an cycle wave A, a cycle wave B, and a cycle wave C to produce this super cycle corrective wave. So now I'm just walking this down to what we're tracing out. So again, that's the largest picture. Now bringing it down to our daily, in the daily picture, what we have completed, and this is where I've rearranged the count, is that this is just the first wave down on an intermediate degree. So prior I had said that what I would attempt to do is to count 5 waves of minor degree down to form that first wave of intermediate degree. And that would then give the conclusion or allow me to say, yes, I believe the highs are in for now, and we're in a longer term corrective phase. I continue to hold that. But in that count, when I had put that the intermediate wave 1 was here and this was intermediate 2, I kept having an additional problem that this 3rd wave that I'm expecting on an intermediate degree should be kicking in and kicking butt, so to speak. But then we have this rally. Now, how I actually really figured and put this all together was there are times when I'm doing an Elliott count, an Elliott labeling, I will go to a line chart, which is basically just takes away all of the extremes, and it's on, these are closes. So this is helpful to me because I can see where the move actually was, minus the extremes that drove it to either an extreme high or an extreme low. So here I can see 1, 2, 3, 4, and 5 more clearly. And because this to me always, I was pushing this drop into being a 2, 3, 4, 5, and putting the 1 here. So I was putting the minor 2, 3, and 4, and 5, all where I just have, actually 3, 4, and 5, where I have minor 3. So it fits much cleaner the way it's counting out now. So I'm more satisfied, or not being complacent, but just figuring that, yes, this is what the market is now telling us, that on an intermediate degree, we have reached wave 1 down, and now we're in wave 2 up. And so, and that fits because under Elliott, second waves are a sudden turn, a sudden reversal sort of in the market. And that's exactly how this kicked off. So what it does change is there is going to be more upside. It doesn't change what comes next. So I actually am now going to be presenting this. This is an opportunity. If this wave unfolds in the way I believe it should or going to, then there's going to be plenty of opportunity as this market continues to move higher. So let's now say 1, 2, 3, 4, 5. I got intermediate wave 1. And because I'm counting this as 5 waves, it's a 5-wave advance because of the intensity and how the internals are counting out. Excuse me. And so I'm going to go back over to the candle. And now I'm going to take this down to the 1-hour chart so that we can now take a look at what is inside. So again, a lot of volatility, and it produced moves that needed to have adjustments made to them. So this is a minor C wave, excuse me, a minor A wave advance as a part of an intermediate second wave. So the first leg, the A wave, is breaking into 5. And so I have 1, 2, 3, 4. And yes, this may still could end up being the top, because our resistance was 14,855. That was a 50% retracement, fits perfectly. A wave, finish 5, do a B wave decline, come back possibly between 50 to 62% back, and then rally in a C wave. So here we could have reached the top of the A wave here. Gotta wait, because the launch back up is holding. Yes, the NASDAQ is off about 22 points off of where it closed on Friday afternoon, but it's holding higher level. The moving averages, there's the 4, the 8, and the 20, all basically grouped together between 32 and 28. So you got a $4 range where we got all these moving averages, and they're just kind of sitting there hugging it right now, because the implication remains the same in terms of the moving averages. If they hold the moving average, they've been trying to hug and hold the 50, and they allowed the 50 to go up. But yes, it came down on Friday morning, that they brought it back, and this rally, they just now took it right up into the close. And so they got what they wanted, and now we're just kind of fiddling around because determinations have to be made. I personally think that we are likely to, if this is 4, then we need to count a clean 5 up. And that could be 1, 2, and then it gets a little funky, 3, 4, and a 5. So it is possible. And if that's the case, then the market should slide from here. A little bit slide in terms of we're now just in a B wave down. So that's going to be an A, a B, and a C down. And then we pick up the C wave, the larger C wave, as part of intermediate wave 2, picks up and takes off. So either this is 1 and 2 of 5, and now we're going to launch it a little bit higher. And if that pulls the case, we do not really run into resistance until we start to break back above 15,000. And that's on the newer fibs to cover it. So in other words, the entire intermediate wave 2 up does have potential to carry it back to 15,306. and 15,639. Those are upside targets. And there likely is one more above all that and possibly up to 16,000. So the market in the C wave, in intermediate wave 2, has now potential to go up to 16,000. Now that, again, I want to also talk about mindset right here, because it is not taking away any of what is to come. Remember, this is still a wave 2 corrective wave. What comes next is a third wave down. So the downside move that I've been discussing and talking and really, getting up on my whatever to say still is out there and going to happen remains. So it's one additional opportunity to take care of positions, to begin to position our way forward in terms of if we get strong enough signals, if we see premium starting to switch from calls to puts, which will start to demonstrate where the market is feeling the risk is. Right now, the risk is still to the upside. It's not risk that they're not pumping up puts, is it to say we're going down now. They are pumping up calls still. So again, but that can switch. So we're going to be paying attention to that. So in the meantime, we have to allow for a continued rally to finish the fifth if Friday's highs at 14,840.50 did not complete the fifth wave. And then in turn, the A wave, the minor A wave. Then we have more where we get up above 855 or just to that level, but stay below. A strong enough push, however, could push us higher and closer to 14,900. Then we come back in the B wave. Then we rally again in the C wave. Ultimately, I do believe these are labels, these levels are in play. And that would suggest that the premium is going to continue to be towards the calls. And therefore trades, option trades, and therefore underlying trades, and what you can put together with those types of trades remains to be selling the premium. So, and the premium sits in the calls. So, and I believe that it really shifts more to the week-to-week basis. So when we're looking at the options, you're looking at the weekly options and you're seeing, then it makes it, you can draw a clearer picture on levels as well, because they'll start to take it to levels that'll match up with what you're thinking. In any case, for next week, or at least for tomorrow, I think we need to allow for a continued rally. We do continue to have that resistance at 14,855 and on upwards of 14,900. Then I would expect an intervening B wave, right? So that's minor A, we have a minor B wave, and then a minor C wave advance to finish the intermediate wave 2. So it's a larger rallying phase, a larger corrective phase. It just happens to be up. So I do believe that over the next week or two, that we're likely to continue to see this bullish posture from the market. And my point as well is that my intent also is to start to discuss it in more of a trading fashion, so that we're not getting stuck on holding or building a position that is going to take more than the next 2 weeks or 3 weeks or 4 weeks to actually unfold and begin to work. So right now we're still looking at the trading that is going to favor more of an upside move. We do have a downside move coming, but it likely may be quick. Just a little B wave down, finish, boom, another 5 up. Okay, so for tomorrow, allow for additional upside. Targets 855, which is where the resistance sits, up to 14,900. Give or take. A break above 15,062 starts to clear the path to get us up closer to 15,260 to 15,306. Okay, so prior to that, I would suspect we hold below, we get that B wave done, and we'll be able to put up Fibonacci retracements to show the depth of the B wave, and then get that C wave up. So I do think for at least the next week, maybe two, we're likely continue to be dealing with the premium being sitting on the upside, the risk being sitting to the upside. How about that? Okay, I'm going to leave it right there. I will be making an additional update either today or tomorrow, so I just need to have the time to do it. And it will be covering the longer term picture, the long-term picture. All right, next update will be on Monday, the 28th.